Charlie Munger, billionaire investor and vice chairman of Berkshire Hathaway, has said that the first $100,000 is the hardest to save. It's not just him. Many people who've grown their wealth think this is true, and the same thing is often said about achieving the first million. Once you reach $100,000, the next one often comes very quickly. Before you know it, you have $200,000, $300,000, and $400,000. Once you reach that first $1 million, your next seems to be just around the corner. It also takes less time to stack up the second one. While some of us might have a feeling that their wealth is growing slower than they want, overall it is going up. Let's discuss why it takes a disproportionately long time to reach $100,000 and talk about some things you can do to speed up the process so you become wealthy still sooner. Welcome to Investings. We teach you about money, personal finance, and investing. If you don't want to miss any videos, and if you're interested in improving your financial future, make sure to subscribe and press the like button if this video was helpful. One obstacle that many people have when it comes to investing is getting started. Investing is often considered low priority, even though it should be addressed seriously. Before you know it, you're feeling concerned about your ability to retire. How many people do you know that would start investing if only they had more money? When they start to earn more money, they'll invest. It's like saying you'll add wood to the fire just as soon as it doesn't need it anymore. You don't invest because you have enough money, you invest because you want more money. Risk is also a common excuse. Most of us know a coworker or friend that has the reason that investing is too risky, so they avoid it entirely. As in many areas of life, the first step is often the hardest. The finish line can seem so far away sometimes. It's just tempting to put things off a while. In order to get the first $100,000 in funding, you'll need to do almost all of the work. This means that most of your money will come directly from your account. As your portfolio grows, it will generate more and more returns for you. Even though the returns as a percentage don't necessarily increase, the returns in dollar amounts become much larger. For instance, if an investment of $5,000 earns a 10% return in 1 year, that's only $500. This is just barely noticeable. Working a few more hours for $500 is easy to do. And when you think about it, it's not really that significant. When a $100,000 investment earns a 10% return, that's $10,000. That's $10,000 to invest and start replacing your salary. Once it reaches $1 million, a 10% annual return is equal to $100,000. That's a lot of money, and many people don't make that in their day jobs. Seeing this kind of growth is exciting. People say that when their portfolio gets to be worth $100,000, they can really notice the progress of their investments. The more experience you have with your portfolio, the faster it will grow. Building up a big portfolio can be really satisfying, and that excitement can speed up the process. In short, you'll be looking for ways to grow your portfolio more quickly and in ways that provide the best rewards. You could potentially find ways to increase your income so you can contribute more to your investments. You might also want to look for ways to earn better returns, which would help the growth grow faster. Instead of going to a restaurant and spending $100 over the course of a few hours, you'll think twice. Compound interest will tell you just how powerful it really is, and that could affect your purchasing habits. This is because you'll realize how much that $100 will grow and continually reward you if it's invested, and it will be harder for you to part with. For example, if you spend $100 on a meal, then that money is gone for good. If, however, that $100 had been invested, it could reward you $10 the first year, the next year $11, and $12 in the third year. Of course, $100 isn't a lot of money, but if you save $100 in different categories on a regular basis, it'll add up quickly. As you grow wealthier, the more options will present themselves. This becomes more noticeable when you have $100,000 saved in your account. You can do many things that someone that lives paycheck to paycheck cannot. If you have the opportunity to take another job with a potentially higher income and more room for improvement, but the pay isn't steady, you have the savings to take that risk. Your job might pay $50,000 per year, but an opportunity arises, it's likely to pay $100,000 or more per year, but it's commission only. If you need a $50,000 paycheck, taking this type of risk isn't practical. Maybe you've always wanted to start a business and have never had the capital or money to fall back on. The new business could make you millions of dollars, but if you can't begin, it's a lost opportunity. Perhaps a great opportunity shows itself in real estate. You have the chance to purchase a home way below market value, but it's going to be a big risk. When you have money saved up, this might be a risk worth taking. While it's not always good to cash out investments, the truth is that you at least have the option if you need to. If an opportunity for once in a lifetime arises, you'll have the money. A person with limited savings will have a hard time executing certain plans. By being able to invest more money, you are able to invest in more options. This can help you to diversify your investments or even take risky bets that may not be the best for other people. If you see potential in a stock, you can maneuver with more risk if you have some extra cash. And if your investment doesn't work out, it's not going to ruin you financially. You'll hopefully still have other investments. One of your friends may present an opportunity to invest in a new business venture, and you're not going to go broke if it doesn't work out. Someone with little money saved doesn't have the option to invest in something like this. If you're still working on the $100,000 milestone, there are some ways to make it happen faster. The majority of these funds will be your own personal investment, so it's important not to neglect saving. You should make a point to increase the amount you save, and you should do this as soon as possible in order to maximize your chances of success and accelerate the process. It's important to save more money on a regular basis in order to accomplish your financial goals. This can be done by either getting an extra job during the weekends or taking some night shifts, where that extra cash can be deposited directly into savings. Consider starting a side business that would bring in some extra income. If you're not saving, make sure to reconsider spending money on non-essentials. For instance, is $100 worth dining out, or would you rather save it for a special occasion? Remember, watching pennies like this is only temporary until you reach your goal and you can ease up a little bit. Avoid making high car payments for vehicles that you can't afford. Car expenses are a common reason why people never reach the $100,000 mark, never mind $1 million. Once you are familiar with the process of saving and investing, you'll be able to continue doing what you're doing. Once you have a substantial amount of money, it will be easier for you to find ways to earn extra money and put that into saving. You'll have become accustomed enough to it once it happens. You'll also be better at being deliberate with your purchases and really think about whether or not it's necessary or if saving is a more rewarding path to take. Furthermore, you will find comfort in taking on risks while investing through different market cycles and get the chance to learn more about how to take full advantage of them. After reaching $100,000, you can let off the gas a little, according to Charlie Munger. Although the first million is the next milestone, it becomes easier as the majority of your investments will likely be the result of compound interest instead of money you need to personally go out and earn. The next time you're stressed about the difficulty of increasing your net worth, just know that it becomes easier, more enjoyable, and more rewarding as time goes on. If this video was helpful, don't forget to like and subscribe. Hit that bell to never miss out when I upload a new video. See you next time.